Hello, Maverick traders. This is Imri, and welcome to today's market roundup. Okay, big day for the markets, big day for equities, big day for currencies as well. So let's take a look and see what's going on. So first off, we've got pretty much up days on everything. Oil, gold, cryptos, equities, risk on currencies. The rallies have all continued in those asset classes. Now, if we take a look at the S&P, we have this long-standing broken support level, which I said will act as resistance. And the market typically gets drawn like a magnet to these important levels once they're broken. And it's on that magnetic reaction that it becomes very important to slow down and take a look and see how we react to these levels. So as you can see, we're poking our head up above and past this resistance level, and it looks like that 50-period moving average in orange is the next target. So if we can test this moving average, that might prove to be a stern test, which I suspect will see us pull back a little bit once we touch that moving average. So I think there is still a little bit of upside left to play here in equities, but I think if you have been long, it's time to start protecting positions or at least managing risk. Over on the World Stock Index, it's a very similar story, except we have a little bit less room to run until we hit that 50-period moving average. But otherwise, the price charts are remarkably similar. We've poked our head back above that resistance level, which was broken support, and it's now time to see how the market's going to react to that overhead resistance that's being provided by the 50-period moving average, or should be provided, I should say. Moving on to cryptos, this action, yes, it was a good day in cryptocurrencies across the board for the most part, but none of the action is particularly inspiring to me. I still think what we're seeing is ultimately going to be nothing more than a bear market rally. I think we have one more leg down to go before we complete a larger cryptocurrency market correction. So I think we have one more leg to go. After that, let's see how the market reacts. So I'm just not interested in playing the upside whatsoever. We've kind of been banging that drum for the entire year here at Maverick. Our view has been cryptos will remain in a downtrend with the occasional bear market rally. And that's exactly what we're seeing so far. Now, in terms of the market outlook, I'm really going to stick to a zero here. We've broken above the moving average, the 20 period that is, but we're still below the 50. And the slope of the moving averages is pretty, it's not as bearish as it was, but it's not like they've crossed higher as well. So I think we're truly in neutral territory here, and we're going to see a big test coming up shortly. As far as the economic calendar goes, tomorrow is going to be a big data day for the US dollar. We have the big one, the non-farm payroll reports coming out, and the unemployment rate. So all eyes will be on those news reports tomorrow. Now, in terms of currency analysis, like I said, over in crypto land, we've got Cardano being the clear out-and-out outperformer amongst this core group. But everything had a reasonably good day. Bitcoin was trading well, so was Litecoin, Ethereum, and Bitcoin Cash were hanging on. But overall, nothing too exciting in the price action, in my opinion. At least nothing exciting in the sense that I'm seeing a real bottom being carved out here. Over in fiat, we see the risk-off currencies trading lower, and we see the risk-on currencies trading higher for the most part. Aussie and Kiwi are leading the pack. It's kind of what we talked about in the FX rooms and in the other market roundups. The reason the Canadian dollar is not doing as well, despite oil doing well, has a lot to do with the proximity between the US and Canada. All right, so what's going on in the dollar, the US dollar, that is definitely going to affect what's going on in the Canadian dollar to some extent, just due to the very close economic and geographic ties between both countries. And the European currencies overall were mostly flat for the day. Now, when we're talking about velocity, I think from this slide, it's pretty obvious what's going on. We are seeing some relative outperformance in the Kiwi and the Aussie. We're seeing some relative underperformance in the yen, the dollar, and to some extent the pound, today at least. And everything else is kind of in the middle. So we definitely want to continue looking at Kiwi and Aussie and pairing that potentially against the yen and the dollar. So that leads me to some possible trades. Normally I'd have us look at some specific currency pairs, but today I just want to draw your attention to the various baskets that we're tracking because I think they're getting really interesting here. So in the Aussie, we're coming up into some important levels here. And I think this is going to be a pretty important test for the Aussie. If we can break through, this stiff overhead resistance here, that's gonna prove something to me. And for what it's worth, I do actually think we're gonna break out. Maybe not on the first try, as we trade back into this zone for another time. We'll probably pull back a little bit, but I do expect us to eventually break out and kind of hold above this resistance. So there is a little bit more room to play the Aussie to the long side here, but I start getting a little bit nervous about running into that resistance. The only reason, I'm saying that I think we still have a bit more room is because on the daily momentum indicator, the relative strength index, we still have quite a ways to go before we reach the prior overbought levels, well above 70 here. So if the RSI retests these momentum peaks, and you see what I would call topping price action, visible slowdown in the price action, that's when I would start bailing on the long Aussie trades. But as you're about to see when we look at the dollar, there could definitely still be some upside in Aussie dollars. So you can see here the dollar looks pretty bearish. If we take out the low from May 30th, then I think that opens the door to us trading back roughly to about here in the basket, which is this band of congestion from late 2021. So if we do break this level, I do expect further dollar weakness over the next several weeks, in fact. So I'm really excited about the potential to short the dollar here. I mean, it's had a tremendous run up, so the unwind might be pretty spectacular to witness as well. Next up, we've got the euro. So we can see here the euro, not all that exciting, trading broadly sideways, but as you can see, we're trading towards the apex of what looks like a symmetrical triangle here. So as we get closer and closer to the apex, the potential for that, for this, a release valve to be opened increases. Now, I don't know which way the euro is going to go. Could break sharply lower, could break sharply higher. But either way, we have a tradable move. And I don't really care what direction it breaks out. What's more important is to identify the conditions that we're seeing in the euro currently and being aware of the fact that situations like these do tend to lead to big moves. And in this case, I would say it's actually sooner rather than later. We don't have a lot more, many more days that we can trade inside this triangle. So I'm expecting that release valve to be open soon, and let's see which way the market wants to take the euro. As far as the yen's concerned, this just looks pretty weak. Looks like a clear bear market rally. We have a little bit more room till we test these prior lows, but I would not be shocked at all if we were to take them out. All right, so still a little bit more room. Weekly RSI was still pretty oversold, but the daily RSI still have quite a bit of room to go before we test prior momentum troughs here. So well below the 30 level, which is traditionally what's considered oversold. All right, so that's what I'm keeping an eye on. Tomorrow, I think looking at the dollar and having a clear focus on the dollar is a good idea. If we get a break below the low for May 30th, then I think we can pair the dollar successfully against the Aussie, potentially the Kiwi as well. You can see here, Kiwi's got a long way to go. The only thing I'd worry about is if I draw some Fibonacci levels on the Kiwi here, I'd just be worried about trading into the 50% level than the 61.8% level. But for a trade for tomorrow, plenty of room to go before we run into those resistance levels. So I think, Aussie, Kiwi, great pairing against the dollar if we get a break below. Otherwise, if the dollar strengthens tomorrow, I'll be interested to see whether or not the euro can hold this support line. So conclusion time, equity markets continue to rebound. I don't see any reason why they'll suddenly fall apart, at least on the price charts. I mean, if anything, I think we still have a few more days of rallies left in equity markets before we put in a I'd say shorter to short intermediate term top. But my expectation at this juncture is that any tops will ultimately be taken out on dips. So I do have a strong feeling that equity markets have bottomed, and we're going to see that play out on the currency side as well. So big data day tomorrow for the dollar. We have the live class tomorrow morning, 6:15 a.m. to 7 a.m. Mountain Time. So if you're able to join us for that class, we look forward to seeing you there. So otherwise, just keep your position sizing tight. Make sure you're following your trading plan as always. I look forward to seeing you guys next week.